Hello folks, this is Raj Sastry from Raj Option Trading. Today we'll cover um, electric vehicles or EVs. These are also autonomous driving type play. So with that, here are three of my favorite stocks. First is NIO. NIO is based in China, and it basically sells smart connected vehicles, and it's also very good in next generation technologies and artificial intelligence. And as you can see here, from a revenue perspective, they're doing pretty well. They're increasing their revenue, as you can see, from 4,404 million all the way to 666, 67 in the latest quarter. And they're also doing well from a earnings surprise perspective. They've been giving surprise from earnings perspective, from a revenue perspective, as well as from a EPS perspective. And their gross margin, as you can see, it's slowly increasing, and now it's turned positive. And net margin, as you can see, it's still negative. They're not quite there from a money making perspective, and they got pretty good amount of cash on their balance sheet, and they also have some debt, which is not too bad. And from a price to sales perspective, they're at a 13.3 multiple, which is a high multiple, comparatively. So with that, their market cap is around 84.43 billion, and it's increasing in the past couple quarters. So it's a good trend from a market cap perspective. Next is Workhorse. So Workhorse is about $4.2 billion company, and their market cap is also increasing, over the last couple quarters. And they basically, manufacture, build, and also sell battery electric vehicles and aircrafts, and mainly in the United States. And from a revenue perspective, these folks are a little bit on the lower side, so they're in thousands, as you can see here. They started with 2061, around 20K. Now it's around 840, and as you can see here, they're getting into 565 here. From a surprise perspective, as you can see here, from a revenue, they're missing revenue, in couple quarters, as you can see here. And from a EPS perspective, they're also missing on the EPS side. So, from an earning perspective, it's a little bit jittery play. As they miss these quarters, their stock gets battered, and then they recover. And as you can see here, their co-founder Steve Burns has got a 100% approval rate. And next is Tesla. Tesla, I think market cap is more here. It's about 800 billion or so. So Tesla, everybody knows Tesla. CEO is Elon Musk, and around 80% approval rate. And as you can see here, the difference here in these three charts, Tesla has got revenue in billions. It's last quarter is 10.74 billion, and as you can see here, consistently it's increasing its revenue, with the few exceptions, as you can see. And it's also giving revenue surprises, positive surprise from a revenue perspective, and also positive surprise from an EPS perspective. Except in the latest quarter, they had a little bit negative surprise from an EPS, and that's why stock got battered. They got a improving gross margin, as you can see here, and now they've turned positive from a net margin perspective, and they got a lot of money. It's 14.53 billion in the market, in the balance on the balance sheet, and pretty good price to sales multiple. It's 15.25, meaning it's getting a little expensive, as you can see here. So with that, let's dive into some couple EV stocks that we have here. As you can see here, from a performance perspective, these are um, on a performance basis, on a yearly performance. So here you can see here, green power is 1734 percentage performance in the last year, last 12 months. And it's from a revenue growth perspective, GreenPower is low, meaning their revenue growth is negative, and they got good amount of cash, and they don't have too much debt. So it's a price is $28. It's you can't go bad. It's okay. But if you compare it to NIO as an example, NIO based in China, their price is $57, and market cap, as you can see here, it's a $84 billion market cap, and they got a good performance, also yearly performance, and revenue is 4.53 billion, again billion with a B, and revenue growth is 146, which is very good, and they got also a gross margin, as you can see here. Next is Arcimoto Inc. So it's again based in USA, and as you can see here, from a revenue perspective, it's a little bit low. It's about $683,000, and stock price is also a little bit low, as you can see here, and a good revenue growth, and they got cash also on hand and a little bit debt. Now, next we got Workhorse. Workhorse, we already covered it. It's a $34 stock, $4.02 billion from a market cap perspective. Impressive performance from in the past year, and revenue growth is also very big, basically because their revenue base itself is a little bit low, and a little bit they got some debt on the balance sheet, which is not too bad. Next is Tesla. Tesla is a big business, as you can see here. It's a market cap is $752 billion, and 519 percentage from a yearly performance. For a big market cap company, it's an impressive performance. And revenue is 28.18 billion, and they got a good revenue growth also, and good amount of balance sheet, cash on the balance sheet. Remember, a couple of years ago they did not have too much money. Now they got good amount in the balance sheet and some debt, and impressive gross margin 21% for these automakers. And next is Solo, which is Electrameccanica. So Canada-based company, low dollar stock, and also market cap is relatively low market cap, and good performance in the last year, and revenue is really in the thousands, 251K, and good revenue growth here, and they got good cash to survive. And next three, Lordstown Motors, Nikola, Kandi. I would say in these three, I would probably prefer Nikola, mainly because they got good amount of cash in the balance sheet, 907.53. Even though revenue is really low, they can survive. And with the management change, the new management seems to be doing better. Next is XL. These guys are into fleets, and they are doing pretty well from a they got a good performance, 92%, and good revenue growth, and they got money 1.5 million and some debt. And next 11, 12, 13, 14, these are a little bit newer type companies, and they also got into SPAC type deal. These are special purpose acquisition corp. These are relatively from a you can't look at their performance very well because these are relatively newer SPACs. But as you can see, our market cap is pretty huge in billions, and we don't have too much revenue to measure them. And these guys have got good cash, as you can see here, good amount of cash, and Hyliion also has good amount of debt here. So we will give it a couple maybe quarter or two to see how it goes. But clearly in these, maybe I would prefer to choose probably Hyliion, Canoo, and CIIG could be the ones to take a look at. Even Fisker is also not bad if you want to build a small position. Next two are Chinese auto plays, XPEV and Li, and both of these are really in very good market cap, as you can see here, 36 and 29 billion, and their revenues also in the millions. And XPEV or XPeng, it's got a good revenue growth also. And XPeng is from a gross margin perspective, it's negative, whereas Lee is positive from a gross margin. I would I would like these two also. It's also doing pretty well. With that, let's look at monthly performance of these stocks and see what we can get out of it. From a monthly performance, we got month here, Jan, December, these are 2020, 2021 Jan, these are all 2020, and then we got 2019. As you can see here, green power, it's it's got some bumps, as you can see here, but overall, it did very well from a performance perspective last year. And NIO, I would say it's a steady eddy for most part. Had a little bit bumps, one or two bumps along the way, but did very well. If history is an indicator, I would suggest this will do very well in the future also. So I would probably buy some and hold it for longer. And FUV, this is also, as you can see, it's got its ups and downs. See here, 150% in November, 134 in June, and when it fell down, it also fell down pretty hard, 22%, 18%. And Workhorse, it's kind of steady eddy, but it's got some very big months, 601%, as you can see here, and some bumps along the way. So what you can get out of this is really these EV plays. They got some months where they're really really bad months where they did not do very well. But as you can see here, almost all of these have bounced back pretty well. So what I would recommend is really when these fall off the cliff, that's the time to buy some and hold it and take it from there. And next we will talk about the performance itself. If you see here, we got all these companies 1 to 16 here and sorted by yearly performance. So first is Green Power. It's a low dollar stock, as you can see here, and it's in the descending order of performance. And we got our favorite Tesla here with the impressive 519 percentage for a big cap stock. So with that, I would recommend you to look at some of the favorites that we talked about here. Say NIO, um, Arcimoto, Workhorse, Tesla, SOLO, XL, XPEV, and Lee. These are the ones to look at because they seem to be doing pretty well, and they got some history to back up their performance. With that, thank you very much. Happy trading.